Some of the most powerful companies in the world are the ones you've never heard of. They don't have flashy advertising campaigns. They don't launch new gadgets every year. They don't sell you burgers or sneakers or smartphones. They sell something far more valuable: control. Control over the companies you do know. Control over the governments you vote for. Control over the markets that shape your life. And one of them is worth over $5 trillion. Not in profit, not even in stock price, but in assets under management. The amount of money they control on behalf of their clients. And yet, most people couldn't name them if their life depended on it. To find the origins of this quiet giant, we have to go back to the 1970s. Back then, the financial world looked very different. Stocks were expensive to trade. Investing was something reserved for the wealthy, the connected, or the downright lucky. But then, a new idea began to spread. The index fund. Instead of paying someone to pick individual stocks and hope they were right, you could simply buy a basket of all the major companies in the market. If the market went up, so did your investment. It was boring, predictable, and for most investors, it worked. One company, we'll call them the Giant, embraced this model with almost religious devotion. They built funds so cheap to buy into, so easy to access, that they became the default choice for pension funds, universities, governments, and eventually, everyday investors. The money flowed in. Billions turned into hundreds of billions, then trillions. Today, the Giant controls more money than the GDP of Japan. That money is spread across almost every major company on the planet. Tech giants like Apple, Microsoft, and Google, oil supermajors like ExxonMobil and Shell, global banks, pharmaceutical companies, defense contractors. If it's big, they own a piece of it. And in many cases, they're the single largest shareholder, which means they can influence who runs these companies, what policies they adopt, and how they respond to crises. Think about that for a second. One firm, invisible to most of the public with a vote in almost every boardroom that matters. They don't run these companies outright, but in the corporate world, even a few % ownership can mean serious power. And here's where it gets more interesting. Because the Giant doesn't just own shares in one industry, they own everything. They hold stakes in rival companies, competing banks, competing airlines, competing energy companies. That S called common ownership. And at S, one of the most controversial ideas in finance right now. When the same shareholder owns parts of competing companies, their goal stops being competition. Instead, it's stability. If two airlines both have the Giant as a major shareholder, does the Giant really want them slashing prices and fighting for market share? Or would they prefer a quiet, profitable duopoly? This isn't some conspiracy theory. It's economic logic. And it's been playing out in industries around the world. Critics call it the hidden monopoly. A monopoly not in one product, but in the ownership of all products. Defenders say that's nonsense, that the Giant is just a steward of other people's money, and their job is to maximize returns, not manipulate markets. But here's the thing. In practice, it doesn't matter. When you manage $5 trillion, the way you vote in boardrooms, the way you engage with management, the way you shape corporate governance, has global consequences. They can push a company to go green, or quietly block a proposal they think will hurt profits. They can approve billion-dollar mergers, or kill them with a single no vote, and they don't answer to you or to me, or to any voter. They answer to their clients, who are often just as faceless. Pension funds, sovereign wealth funds, other corporations. In other words, the real owners of the world are a chain of invisible hands. Now, you might be wondering, if they're this powerful, why don't we hear about them more often? The answer is, because they want it that way. Unlike tech CEOs or celebrity billionaires, the leaders of the Giant rarely seek the spotlight. They give controlled interviews. They speak in measured tones. They avoid controversy, because their influence depends on being the quiet player in the room, the one everyone needs but no one talks about. The risks of that kind of power are obvious. When a firm's size means it's too big to challenge, too important to regulate, and too connected to fail. What happens if they get something wrong? What happens if their algorithms misjudge the market? Or if they decide that profit matters more than the planet? We've seen glimpses of this already. In 2008, during the global financial crisis, the collapse of big financial institutions sent shockwaves through the economy. Now imagine if a firm controlling $5 trillion stumbled. The ripple effects wouldn't just be national, they'd be global. And yet here's the twist. If you have a retirement fund, if you own a simple index ETF, if your government invests your taxes, odds are, you're part of the Giant. You own the companies they own. Your money fuels their power. You're not just watching the system, you're in it. $5 trillion, one company, invisible to the public eye. The question isn't whether they're too big to fail, it's whether they're too big to even see. Because if we can't see the most powerful company in the world, how will we know when they've gone too far?